Otsukimi here. Who else would it be? This is just a new video. This is going to be in replace of observations with Otsu. I'm basically just doing a top-down analysis with Bitcoin, Ethereum, and Solana since we closed the monthly, we closed the quarter for this year. We also closed the 2 week, the 1 week, and then of course all the way down. So this is going to be the supplement for that. I meant to do a longer video, but didn't happen. Had a lot of things going on. My whole family's been sick, and if there are some fireworks in the background, I apologize. It is the 4th of July here. I also live pretty close to a fireworks celebration area, so it's just going to be how it is. And so yeah, just how it is. So we'll get started. We'll take a look at the 3 month and down. We're going to look at Bitcoin first. And this is going to also be the replacement for the regular market updates for my Discord channel. This is not a replacement for the premium. You guys are going to get your own video like you usually do. But this is going to give some analysis for Bitcoin, Ethereum, Solana anyway. So this will supplement the regular videos that anybody can have. And by the way, I don't talk about this enough, but like you guys know, I have my X, my Twitter account, right? I also have a free Discord channel. You guys can sign up for that. I also have a free, or not free, I have a premium version of the Discord channel where you get extra insights pretty much almost every single day, at least 5 days a week. And then he goes into that. I also have my Apex Academy coming up. There is a chance that I'm going to delay that for 2 weeks. I'm still in the process of looking how that's going to wrap up, but I think I'll have to do that. And I'll explain that why in another video at another time. But let's get started with this. So first things first, I'm going to clean this up. And so again, apologize for the fireworks. It's not gunshots. It is fireworks. So it's going to be how it is all day. So anyway, with this, I think I'm going to go to the index chart. See, here it is, all-time history index. So this is kind of what this looks like. This blue area here is the band. This has not ever been bearish on the 3 months, so that's a good sign overall, and not necessarily a good sign as far as trading goes, but it shows the nature of Bitcoin as an asset. It is a deflationary asset. It gains value versus the US dollar and pretty much every other currency. And so that's kind of how that looks. We put in a new high 6 months ago, and since this is a current closing candle. This is the current candle. This is not a valid candle for my analysis usually because of this. Now, first thing I want to note is we have a bearish divergence. Now that doesn't necessarily mean anything in particular because we also had one here. And so that means we did, this could have been a reason why it led to the drop down, but this is a good question. Do these divergences on these high time frames make a difference? And I say yes. I really do. Now, that being said, it's not that easy as well. This could easily go back up for the next 3 to 4, even 6 candles, and then that could be our divergence for the next cycle. So that the divergence itself doesn't tell us where to go. Okay, is that if that makes sense? And also, in some of my videos before, this has not been on an academic video, but this has been commentary through my videos before, is that this divergence has not triggered yet. And so with this is the trigger for this. And so if it goes back into the range, then this qualifies as a valid divergence. But this is a current candle. So the current candle does not count towards this. So we look at this, we actually closed above. And so our determination with this is that this is a bullish retest, actually. This is not a bear div, this is a bullish retest. Now, we also had a divergence here, but then we also had a hidden bull div here. Now, a lot of people will make fun of me for hidden bull divs, and I understand why. That being said, when you get a bear div with a hidden bull div, they tend to cancel each other out, and that is one reason why we actually got the move up. Okay, and there's other reasons as well. I think it's a little bit of a cheap shot to say that that was the reason. That's not the reason. It was one of, dozens of reasons that work confluent together. And that's the thing a lot of people don't understand. They look for correlate, and this is why I pretty much almost make fun of correlation with Bitcoin and the equity markets and things like that, is people are looking for correlations, but you can find confluence instead of correlations, and you can find that confluence in within Bitcoin as an asset. And so I think of it as these, like you may have seen these shows like CSI, things like that. They try to sound really smart, and they're not really smart. And that's the kind of viewpoint I take with the correlation with the equity markets, is that you can make a case for some correlations, but when you actually practically apply these, they don't happen as much as you think. And I'm really trying to be nice and sincere about that. I'm really not insulting anybody. I'm really not making fun of everybody. This is my experience. Keep in mind, I'm a redneck, homegrown trader that has done this for 10 years, but at the same time, I'm not educated in that sense. I've done this myself, and with my experience, I have not had to correlate markets at all. Okay, all of my success has been done without correlating markets together. I look at markets individually, and so this is how I look at it. That's also why you can look at the S&P 500 and look at that because it's an index by itself, right? And then you can look at stocks, and sometimes they don't make sense together. Okay, and so that's the same way, right? And so the problem that you have right now is a lot of people are saying, well, the market's not correlated. Like I see it as a running joke now, is that, well, equities have gone up, Bitcoin's gone down, crypto's gone down. Well, why is it going down? I thought they were correlated. No, they really aren't as much as you think that they are. I mean, they might be a 5% or 10% correlated. That's not really where I'm going with this. But the thing is, a lot of people will try to take the correlation aspect, and then if it doesn't seem to be correlated, they make an excuse for why it should be, but it isn't. Okay, instead of going the opposite way, is like, well, they really never are correlated, and then sometimes they are. Okay, just because two cars are going down the street at the same time doesn't mean they're going in the same direction. Doesn't mean they're going to the same destination, I should say. And that's how you should view this, in my opinion. There are times where the S&P and Bitcoin and Nasdaq, whatever, all the equity stuff, right? There are times where they look the same and they behave similarly, but that does the last thing that you should do is believe that they always will. Okay? In my experience, they've been much, much, much less correlated than they are, and that's how I view it. Okay? And so and this is someone that has benefited that I've made money doing this as well. So to be honest with you, I don't care what the S&P 500 has to say. Okay, it doesn't affect how I look at this. And I did a poll, I think sometime last year, that said more than half of people correlate it to the S&P 500, and that's really weird. And honestly, like, I'm not saying that that's why you're not making money, because that's kind of a cheap shot, but why, how is it benefiting you? See what I'm saying? I would inverse that and say, like, all right, what's the reason, if you're not making as much, if you're not making any money, why are you not making money on a bullish asset like this? For the Arun perspective, is never gone bearish, is never gone bearish on the Arun on the 3 month at all. So why are you not making money off of it? Okay, and I'm not saying that to make fun of anybody. I'm saying that for you to be real with yourself and say, okay, if you're trying to correlate to the markets outside of Bitcoin, is there a chance that that is the reason you're not making money? If that makes sense. And so, again, my goal for you is to always be a better trader than you were the previous month, the previous 3 months, previous year. Okay. I'm embarrassed about my first 3 to 5 years of my trading career, and I think you should. And even me as a writer, I got my own business, right? Like, I you should be embarrassed about what you write the previous year, okay? And that's by design. Like, everybody is going to grow in where they're going. The same with trading, right? And so I just ask yourself, like, how is that going with the correlation? I don't correlate that, and people that are trying to correlate that are freaking out right now, trying to make sense of a market that they are trying to force. They're trying to force a narrative that, frankly, doesn't need to be forced. There are other ways to explain it that are much simpler, that don't rely on denial, that just rely on the markets. The markets aren't necessarily rigged as much as you think they are. I mean, of course they're rigged, but it's like, what does that got to do with you making money? Okay. Um, don't use that as an excuse. And if it is, then maybe you shouldn't trade, maybe you should do something else, right? So Not trying to go there. I'm just saying there's no bearishness on the A run here. So how are you making money with this? So, but as far as this goes, if you get rid of this current candle, you have this the bullish retest here. You do have a potential divergence if this closes below, but we got 2 months, 27 days, so we got plenty of time. A run as far as this goes, we are kind of setting up a cross here. This will probably lead to a bearish consolidation here. We've had that before where we had this structure. Here's a consolidation structure. This led back down to the band here. Excuse me. Have another one here. And many times this crosses back up. Usually, this is usually the highest that it goes. It's right here is the highest that it's went at 43%, and we're currently at 50. So there is a chance that this could come back down to the band right here, which would be 46,000. I don't want to deter anybody. Now, again, that could take 2 years to do, okay? Because there needs to be a lot of confirmation, and each candle is 3 months. So if it takes 4 candles to do it, then that's going to take 12 months, okay? So just keep that in mind. So overall, not much that we can gauge with that, unfortunately. Now, we could look for a break of this from the RSI perspective. And so again, that might take 3 to 6, 12 months to do. So other than that, can't really tell too much with Bitcoin, but it is a good performing asset. Now let's go to 1 month, and I'll go faster than this as far as this goes. So I left my liquidity signal on, so I apologize for that. But you get free signals, I guess. So with this, another 1 month close. We close above this structure here. This is the structure we're looking at. Again, we've got 27 days till it closes. If we hold above this zone, it's looking good. If we actually close below here at 61.3, then I think, if we close under this, then we're going to deviate, and that's going to be a bad sign. If that's true, we're probably going to hit this band here at 53, 54,000. We'll see where this goes. We got plenty of time. 27 days is quite a bit of time. I don't think that we're going to hit below it. I think we're going to go back above. So we'll see how this goes. Bear consolidation here. RSI is just kind of floating around. Nothing to in particular. All right, with the 2 week chart here, here's the. I'll just get rid of this here. The deviation of this, should say the top liquidity area, swing high order block. Sorry, I couldn't think of the word. Is a little bit in a different area, so I'm going to remark it here. And so again, when I mentioned that we closed inside the band and we're kind of going currently below it, this could recover, but we're kind of stuck in this mid zone here. And so we're going to play the break of this here on the 2 week chart. If it goes below, then we're deviating again on the 2 week. And so this is kind of where we're at. So we're facing deviation territory. And I think that that's one reason why a lot of people are subconsciously concerned about this area, is that we are going to an area that most people believe we should not go. And so, whether you're conscious of that or whether you are not conscious of that, that's kind of where we're at with this. And so, uh, with that, it does bring a lot of uncertainty in the markets. The markets are very rough, as you can see right now. Pretty big red day across the board. We've had a lot of days where there's minus 10%, minus 25%. And Bitcoin put in minus 5, 6% earlier today. And we'll go ahead and take a look at that here in a second. But that is kind of where we're at. If we deviate here, we're going to probably spend a lot of time. We probably won't visit the 60,000 range too much any longer unless we get a fake out. If this is the case, then we're probably looking at this range right here with this area. I'm going to polish this up just a little bit. Somewhere between 57,000 and 46,000. So that does play into the 3 month chart, however, is that there is a possibility that we could hit 46,000. Now, whether that happens now or whether that happens 2 years from now, again, I am not aware of this just yet. We have to wait for the confirmation of that deviation. Also, I don't want to scare you about this because you just have to play the markets as they come. Okay? I think a lot of people's problem is they expect 100,000 to happen or they whatever, right? And a lot of bears have this problem too. They expect a lot of doom and gloom price action, and so that can get the best of you if you are too, I don't want to say full of yourself, but that's kind of what I mean. Like if you're too focused on your perception of the market instead of what the perception or what instead of what the market will do. And so that's part of the problem. A lot of people's issues are they believe the market will do this XYZ. And sometimes I say that when I mention my charts, but that's not really what I mean. What I mean is I do think market will go XYZ based off of ABC. Okay, so like I have reasons, concrete reasons to believe the markets will do what I think that they will do instead of, and that is a different thing than saying, well, I just think Bitcoin's going to 100,000. Well, why? It might not, but why? And so if you can't come up with a good reason why, then that makes it more of a gamble versus analysis. If you don't want to do an analysis, that's fine. But my chances are, if you're watching this video at this point of the video, you are interested in technical analysis, and therefore you need to come up with what you think the markets will do based off of technical information. So that's kind of how I see it. Now let's go to the 1 week, and I'll probably do Ethereum and Solana a little bit faster than this. So here we can look at this again. We can readjust this zone. So this is going to be variable, right? Like I do have to adjust this based off of the candle closes. Now that will have an effect, and so when I adjust it only for that time frame. So just keep that in mind. Now with this one, we had a weekly close right here. This is a pretty good close actually. Despite this being a bearish close, and the Avern is bearish, hinting by the 1 week. I think we're still bullish on the 2 week. Yeah, we are. And so also going back to the 2 week, we don't go bearish on the 2 week too often. So if we do go bullish, that is a sign to pretty much long, like super long, right? So the last time we went bullish was basically right here, and we're still up 166% on Bitcoin from that. Okay, and so you only get like from the drop from 3,000, we only had three of those, I guess technically. And so now we're on one. So you only get maybe two or three of these on a market. So just keep that in mind. Going back to the 1 week, 1 week is bearish. We also have a squeeze formation here, which a lot of times we tend to drop with the squeeze. We drop right at the squeeze, which is true right now, and then we tend to come back. We tend to retrace that. And so here's a good example right here. We actually drop down here right before the squeeze. We pump back up right at the squeeze, and then we kind of try to come back up. So I would not be surprised if we actually rally here in the next 2 weeks or less. Could be tomorrow even. And then, so like we pump back up to 63, 64,000. We come back down to maybe the 60 flat area. And then we actually retrace this and maybe retest this red line right here. And so that'd be like 65, 66, upwards to 68, depending on what time that would be, versus how many candles have printed since then. So I look for that. I'm actually looking, and I'll look at the daily for why I think that the market will reverse here pretty soon. You guys in premium know that I've actually been pretty bullish, and that seems like I'm the worst trader ever because we've had a pretty bad week. Okay, but I'm looking for bounces. That's the key thing there. And I did mention a lot of positions that I think will do good. However, I also mentioned that they have not triggered yet. And so that's part of it. And so with the premium video, that's what we'll discuss actually. So if you're in that, wait for that. If you're not, you can sign up. There's a 7-day free trial too, of course. So this is kind of what I'm looking at. Also on the weekly, we have a tightening here, the Aron band, that typically happens when we have a big fixed move coming up. Now this could be to the downside, but typically when it's small this is a bearish trend right here. Typically that results in a bullish move. So I'm still looking for a V-shaped reversal here, and I think that we could possibly get it. Here are some smaller examples here where we actually had a down move with this, and so here's another one that led to a down move. So we're currently in a down move right now. Here's another one right here. I don't think I've even been this far with this, and so can't really see it, but that kind of led to an upward move. So it does depend. It is bidirectional. It doesn't always say like, well, that means we will drop, we will go up. It just means that volatility is coming, and so far it has. So anyway, that's the weekly. Now another thing on the weeklies, we're also really close to the 50 here. Now if we can cross above the 50, which I'll mark right here, I think that that's a really good sign. This is a fantastic. I don't know why it went away. But this is a fantastic area for this to bounce, and I don't think people really seem to understand that. And so if we can close above this blue line, especially at 60,000 by the end of this week, I think this looks really good. I really do. So let's go to the 1 day. Now, I really like the 1 day here because this is exactly what I was looking at. And so I will go ahead and flip this over to my regular chart on Binance. And so this was our previous range. This was the mid of that range. This was created. This inside block here was created because of this candle. This created a bullish breaker from the previous range. We were supposed to retest that. We technically kind of did. Good enough for current price action. And then we touched the 200 EMA, which is also confluent to the bottom right here from this low. And actually, this is a little bit lower here. So as you can see, we're right at the confluence point between the 200 EMA and the support or the low range of this structure. And I want to emphasize how important this is because when a lot of things tend to reverse or key regions, they tend to develop at confluence points, which means there are two or more very clear signs that something should happen. So, for example, a lot of people use moving averages as support and resistance. Yes, I could come up with any number. I could pick the 67 triple moving average or whatever, and I can create a support structure. But that's not what I'm saying. I'm looking at the 200 EMA, and the 200 is very crucial. It's one of the most it is the main EMA. A lot of people use it for death crosses and golden crosses and things like that. And so that's one area. Historically speaking, we tend to bounce here. Okay, we had a bounce right here. Actually, if you go to the weekly, we had a drop down here, had a retest, push up above here, and then we had kind of a retest here. But 200 tends to be pretty significant in the markets. We had some areas here, and so I want to emphasize that sometimes it's not respected like this. And there's other ways to analyze that, and that's not for this video. But something like this is a good example where we had the drop down, and then you get a retrace above. If you just long that, honestly, target the low here, you got your entry at 22,000. Now, how many of you would love to go back in time to get that 22,000? But you're too scared to do it at the time because of whatever reason, and that's the key thing. A lot of people have no fear of buying oversold when things are hyper bullish, and they're too scared to buy something when it's too super low and it shouldn't go down anymore. And so that's part of the market psychology of this. But when two things happen like this, you have your 200 EMA touch, you have your support low range area, and you actually have a bullish divergence. So you put the lows in. Now this does need to close, and this is exactly, if you're in my Discord, you know exactly what I'm talking about. I've talked about this all week, that I was wanting this. This was a bad sign. This rejection would lead to a drop down. We got it. I wanted that divergence. So far, we are getting it. Unless we close above 60,300, we're going to get the divergence I'm talking about, and this will be a potential long signal. Now, if this comes back down a little bit low, that would be on hold because it's underneath the 200. And then if we get a bullish candle above the 200, then that's a deviation. That's a bullish deviation. Then we can long this. Okay. So I can't give you anything in particular as far as like what to long, what to short, but this is looking really, really good. Um, I can't emphasize enough how bullish I would be if we closed this way. And that sounds really bad. A lot of people don't want to buy right here. But that's where I've distinguished myself, where I bought it like 16,800, at a big divergence here on, was it the 2-3 week chart? Where's it at here? I don't know why it went that way. And so I think it's the 2 week, where we had a divergence here, and I literally bought right here because it's like we've already dropped down for so long, got the divergence. Okay, easy. The easy idea is the analysis. The hard idea is the implementation of that. And so we're getting that confluence. I like what I see. We'll see if we continue to get that. So that is Bitcoin. I do think that we will pump from here. Now there is a chance we got two extra areas we could touch down at this red trend line right here. If we do that, that's going to be somewhere between 53.4 and 55.0. So that is a possibility. Also, we have this 52 area read test that a lot of people have had their eye on. That is a possibility as well. Now, if we do get that, that could be a good spring formation. And so that is possible. So those are some options with that. But anyway, that is Bitcoin. I think I will do Ethereum and Solana a little bit later. It's going on longer than I thought. I want to keep it short, but that's the analysis for that. This is Independence Day for me, so I hope you are having a good holiday if you are in the States. If you're not, I hope you have a good day anyway. So anyway, that's it. Let me know what you think, and I'll see you next time.